Good afternoon, traders. This is Christian from Starbuck and Trade Group, and this is your end of day recap for Wednesday, July 24th. This will be a quick video tonight because I have to run to the dentist. But hopefully there's no audio problems today. I apologize for that in yesterday's video. Let's get right to the price action. Obviously, a lot of red on the screen except for this guy, the VIX, which is up 22.5%. A couple things. First of all, risk disclaimer, everything that we're talking about in this video is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. But just interesting that I really thought that earnings was going to kind of take the lead in terms of what we were going to see in this market once we had three days of a pullback last week and then a little bit of a bounce this week. Not the strongest of bounces, but some areas obviously did better than others. But I really thought it was going to be earnings that were going to run with the ball. And I think that is pretty true to form. So far, a couple names that reported earnings just didn't excite investors. Google breaks down to the bottom of the value, goes right down to the bottom of the value area. So pretty decent move to the downside, breaks the 50-day moving average. And this group was already weak, kind of coming into obviously this week, and really got pushed below. And then the other name was Tesla. And I'm not really gonna get into the nitty-gritty here, but what kind of just makes me think a lot about this move that we saw, a couple weeks back was this big move up in Tesla a couple weeks back was a couple things, right? It was, obviously there was a catalyst, and that catalyst was that's the robo-taxi could be coming out, and a couple other things that Tesla had in the works. But it also had to do with positioning, right? There was a lot of shorts, heavy shorts. Hedge funds were massively short Tesla, and that's why, and this is basically what we've seen in now, not just Tesla, but a few different areas of the market, where the positioning just was way off sides. And Tesla ripped to the upside. It did not complete the 80% rule. It got pretty close, but it did take out off this VPOC and this VPOC up here. And I was not holding anything in my trading account. I do have a position in my long-term in my long-term trend following account, but I made sure to kind of get out of it after this because again, it really wasn't moving on anything that fundamental. It was more momentum and it was more positioning, right? And of course, we've seen that too with what's been happening with things like IWM and the regional banks and so forth. So that was a couple stories that really kind of hit the market pretty decently because these are just two big stocks, and of course there's ripple effects. So let's bring up S&P futures and we'll talk a little bit about where we are at this point, which is right against that 50-day moving average. Right here was the 3-day sell-off last week, a little bit of a bounce. We mentioned that we had levels to watch, and kind of tough today because we got right to we gapped down and we just kept on going down for the day. And not a lot of dip buyers in sight for the day. Qs, and we could also just kind of just go through the 1 hour chart really quickly. We're sliding here. Yes, we've got a green bar here, but the trend is down and below all these short-term moving averages. There's another VPOC down there at 5,436. And you can see this is now a pink box. So we'll see if this, I really think the 50-day moving average could come into play here, but this will trigger the 80, the bearish 80% rule, which will be basically looking for a move down another 2% if that 50-day moving average cannot hold. And I do think that the 50-day moving average will be important. Qs, on the other hand, which have been underperforming now for I think it's a couple weeks at this point, but there's the bearish 80% rule complete. We talked about that several times this week. If you read my morning notes, I've talked about the 80% rule. I said that once we kind of got about halfway through, I said there's no there's no guarantee or any reason why there's a guarantee why this would go through in a straight line. So you had a little bit of a bounce. Yesterday was a little bit of a hint. The way that the Qs were acting at the end of the day was pretty darn weak. Giving back a lot of the early profits for the day, and that's a major move. The Qs finished down 3.6% for the day, so that's a ginormous move. So when we get down to, so the main thing to realize, like if you were playing a short, right? Yeah, you could be taking profits here. Does this mean that we're going to bounce right here? No, it's just a level of interest, and we didn't hold it, but of course, there's some positive earnings reports after the close. So I would be paying attention to this 464.25. That's the bottom of the value area for the month, right? And here on the 1 hour chart, you're going to see that there was a VPOC that was taken out too. So it is a logical place for a bounce. But remember, when we get down to support, it's an area of interest to pay attention to. It does not mean just go out and start buying, right? You want to make sure that that support, funds but and buyers are supporting that, right? Another reason that why some of these days once you're down this far that you don't come back very much, and that's because of gamma moves, right? I know that there's been a lot of attention on 0 day options, right? And that's like captivated people's imagination about, how much option flow impacts the market. And I get it. There is a lot of option trading that goes on in a day, but there's also many other mechanics of the market, right? There's too many notes, in my opinion, from, again, I'm being a little bit critical here, but there's too many people who write notes just about options, right? You're not looking at the overall market. And I'll give you an example. When I used to work, when I was used to work in institutional trading, I used to have a lot of buddies who worked for hedge funds, and I would ask them, "What's the proportion of your trading?" Options versus stock. And usually like options would be like, oh, maybe 15-20%. The other 80% of that they're doing is stock, right? So and that depends on the fund, right? There's all different types of funds, but that's generally what I heard was that the majority of what hedge funds are doing is in stock, and they do trade a little bit in options. It could be 15%. If it's somebody who, if it's another fund, it could be 30%, but stock trading is the majority of what happens. And in my opinion, there's way too much emphasis on just trying to read option flows. You got to look at the whole market. And all of the price action, when you look at a chart and when you look at the price action, you're actually getting all of the flow of what's going on in options too. Why is that? Well, that's because market makers are going to use stock to hedge options, right? It's another thing. I feel like this is a video where I'm going a little bit off tangent, but there's so many misconceptions. I always get questions about, hey, well, what about the market makers? Are they going to push this market this or that way? Market makers don't do any of that. There are some funds like a Jane Street, which will take positions and they will speculate on one side, but the majority of market makers are there to function to facilitate order flow, right? And earn the bid-ask spread. They're not pushing the market in any direction, right? All they're doing is hedging, right? So if someone comes in and they want to trade a large block of options, they're going to trade stock to hedge that. All of that will go into the volume profile. I don't have to worry about call walls and put walls and all that nonsense. And the majority of what happens is when something gets to one of these 100-point levels in an S&P, they say, okay, now you got to watch the next level, which is 100, another 100 points up, right? In the S&P. It's really, in my opinion, never been helpful to me, but if it's helpful to you, like a security blanket, go for it. But all of it could be found when you're reading the chart, when you're reading the volume profile, because all that volume is contained, whether it's stock, options. But yes, what I was getting at is that forget about 0 day options for a second. A lot of times what happens is there's gamma moves. So for example, anybody who trades SQQQ or TQQQ, all of those funds, they have to hedge at the end of the day. So if there's a down 2 or 3% move, that means that they need to sell more so that they have enough exposure in their swaps that they use for hedging purposes in order to get them to leverage in their funds, which could be 2 or 3 times, right? That's why we don't see a lot of comebacks at the end of the day, is because these folks really have to hedge a lot at the end of the day. All right, I'll move on from that, but here, that's where we are in terms of support. IWM, which has been so strong recently, also succumbed a little bit because even though the small caps are different than the overall market, if there's going to be heavy volatility, right, they're not going to hold. They just can't hold up. Maybe they'll hold up a little bit better, but this was a rejection, and we talked about this yesterday at 222.90, right? And that's also been in my um, morning charts. All right. A couple other things to mention. The VIX, here's where we are. So we basically had a full green, or in this case, white bar on Bloomberg. But you know, we've talked about how we've had other bouts or episodes of volatility, and usually you want to see a candle. And I said this towards like the last hour of the trading session was that you want to see like a fade. We didn't really see that at the end of the day. There's a little bit of a fade, but the VIX did get higher than where we were on Friday. So not an overall, for me anyway, the way that I kind of look at the market, not a great sign. But again, there's no certainties. There's no certainties that we're going to get more volatility tomorrow. It's just not the best look when we close near the highs of the day on the VIX and the VVIX, which I generally look at when volatility spikes up like it did today. Here's the volatility of the VIX itself. That's another full on solid bar, and much higher than where we were on Friday. So again, other situations where we've had these episodes of volatility, you want to see, maybe an inside day tomorrow and then it kind of die down. But again, it's going to be, I think reports are going to continue to kind of drive the market a little bit. Here's what we have after the close. Look at this, Molina, which is, another healthcare type play, is up 12.6%. VKTX had good, I believe that they had a study that came out. ServiceNow's up 7%. That name is so good on earnings. I did not play it because I just didn't want to really play any names. Looks like Chipotle gave back a lot of gains, still up to 53, still up 2% in the after hours market. I like this Chipotle here. I think it's had enough of a move down, right? It's been steadily moving down since the stock split went effective, but right at the 200-day moving average. And if it manages to stay above the 200-day moving average, I would be looking at a long. Other names that I've thought have been pretty good here is basically what Berkshire has been doing. Here's Berkshire Hathaway. At least I think maybe this is not the, every time I try to bring up this name in here, I think it's .p. Oops. Right, here we go. That looks better. Right, so nice digestion here. Just have to wait for it to kind of turn the corner back up. But I think this is a better market right now for Berkshire. A name that I talked about yesterday, which did not work out. Remember, we go over the losers and we go over the winners here. But look at Apple. Did not hold that 20-day moving average. That's a logical place. Textbook, as I referred to it yesterday, place for this to hold, and it didn't. It's not always going to happen where things hold there. But you do have another level of interest here, and I actually added a little bit of Apple at the end of the day, just to see if it gets a bounce there at the top of the value area. Again, I want to see what happens once we're at a level of interest, and not go out crazy out on a limb. FTAI worked out pretty decently, but I added to this as it kind of sold off a little bit today, and another strong earnings name. So as I said, I've got to jump to the dentist, but a lot of red on the screen. Let this play out. One of the things that also should put things in perspective is that at one point the Qs were up like almost 20% year to date, and we just got past the halfway point of the year. 13%, like if you would have said in the beginning of the year that the Qs would be up around 15% year to date, you would probably say, hey, that's a great year, right? So yes, this is so far another correction, and we'll just have to kind of go through the normal the normal procedures of watching how this plays out. One of which, the volatility, as I mentioned with the VIX, needs to come in a little bit, and we'll need to kind of find support and see buyers come back in. Now we've got a lot of more earnings reports to go, so that will really also be the driver if people want to go ahead and start buying the dip in some of these areas, or if it's going to be more things like the small caps that are going to lead. All right, guys, that is it for today's recap. Have a great night. See you tomorrow.